Bang! What is up, folks? Welcome back to another episode of the Daily Crypto Byte. Today is Tuesday, November 23rd, and we got plenty to talk about today. It was a rough 48 hours, but we seem to be bouncing back here, finding some support. The metaverse plays. Dr. Sand, the Sandman, still ripping, looking very, very strong, even amidst market weakness. Plenty of interesting headlines to talk about as well. El Salvador and the Bitcoin city. Plenty more stuff. Before we dive into it, Dr. Sand, CJ, how are you guys doing today?
I'm doing well, Monty. Sand has treated me well. Mana has been doing well. And my question to you guys is, because not that those demonstrate that I'm smart, I'm not so bold as to think that, but I think one of the reasons that that these two protocols, maybe, and a bunch of the others that you guys talk about all the time, are doing so well is, has anybody taken a look at the freaking gas fees? I know, real crypto people do that all the time, but, when I'm looking here, gas fees are to the moon. I mean, if you think some of these protocols are mooning, gas fees are mooning. And if that's the case, people like, for instance, that Constitution, remember that one where a bunch of people got together and I forget, they put in, $20 or $100 a piece or whatever. Maybe it was $200 a piece. And they were going to buy a copy of the U.S. Constitution. Well, they didn't get it. They got outbid. And if they were to return the money to everybody, between the gas fees going in and the gas fees going out, I don't know if there's any money. You know what I mean?
Oh, yeah.
And I think that was really harsh reality for a lot of folks that said, wait a minute, we can't do this if gas fees are going to eat up half of somebody's investment. So I'll just throw it back to you and say, what's going to happen there? Does that mean that all of these alternatives to ETH have to, Avalanche and everything else, just really, that's why they're seeing this kind of surge?
Well, of course, wealthy folks can still use ETH, but that doesn't represent the vast majority or demographic of crypto users, or more importantly, future crypto users. So yeah, that's why we see transitions to AVAX, Solana, and more high throughput blockchains. And that probably, Monty and I have discussed this concept and likely why it has led to such a success in assets like Solana and more recently AVAX.
Yeah, because it's real. Sorry.
Oh, yeah, it's definitely real. And, I think building on that point, it's not just the speculators as well. These gas fees affect developers just as much, probably more than they affect speculators. So whenever we see this increase in gas fees, it's not just that it's cutting out retail traders, it's also hindering development that happens on the blockchain, which is also, I think, maybe even a larger contributing factor. And as a result, we've seen more and more headlines start to pop up like this one here. We talked about AVAX yesterday entering the top 10 of the crypto market cap, passing Dogecoin. But I think what's interesting that came out last night was this partnership between Deloitte and Avalanche in working to build efficient disaster management platforms. And I think that's just, one indication of what, I was just speaking about in the sense that when we see these spikes in gas fees, it's not just developers not just speculators that look elsewhere. Developers and companies looking for partnerships look elsewhere as well. Right now, AVAX is performing incredibly well, high throughput, solid fundamentals, and as a result, it's gaining both retail and institutional speculation, which is why this thing has just been an absolute force to be reckoned with. So, I think this is just one of the first of many high-profile partnerships that we'll see coming out of Deloitte, but as you can see, there is some legitimate development going on here with some, very interesting utility for the Avalanche blockchain. So where ETH has been kind of hindered by those gas fees, it's been great for other assets in the space.
Yep. Well, it has. But it's like you said, it's sort of anti-democratization. It hurts ETH. that it's so expensive right now with ETH. And I was super bullish on, and still, it's my second largest crypto. But it makes me pause that there might be this kind of issue that I don't know how and when they solve it, Monty.
Yeah, I mean, ideally, when the foolproof stake switch occurs, then gas fees will be at least more consistent in the sense that they won't be as variable. So it won't be super high one day, super low the next day. But depending on the network congestion, we're still not too sure where those gas fees will be at, or even when that will happen. So in the meantime, it is a big issue, John. I agree, and we'll be watching some alternatives as a way to kind of play that. But moving on to Bitcoin and what we've been seeing there, CJ, we've been seeing some interesting stuff on chain today. Bitcoin bouncing back a little bit at that critical 56K level. What are we seeing over there on the Bitcoin charts?
We were talking about in our community just recently, Monty, you had mentioned that miners are actually transitioning or have transitioned to net accumulation as opposed to just distribution. So they're actually holding coins now, and that flip has occurred. Oh yeah, thank you for sharing that.
Yeah, and what I think is interesting about this chart, CJ, is whenever we see that net position change, it's typically cause for concern. But I think what's most noteworthy is the flip back to positive. Whenever we see that following a brief flip into a net negative position, it's typically indicative that that flip was just the result of some healthy profit taking that you see following a sustained uptrend of a period of about a month, like we saw here from the middle of October to the middle of November. So I think the fact that we're flipping back to net long today kind of confirms that this negative price action we saw over the last week or so has actually just been the result of miners taking profit. But I would love to hear your thoughts on the market as well.
Yeah, there's another interesting chart to go along with that. You call it taking profits. For some, it's taking profits. For others, it's realizing losses. But I want to bring up the realized loss chart, specifically with the shorter term holders. In bull trends, typically what we see and what we did see all throughout our first initial climb was each time this SOPR short-term holder, realizing losses. Once that resets to this one level here in bull markets, typically that's been an optimal time to look for dip buying scenarios. I mean, with each one of these resets, the trend was able to rally following that. Of course, once we entered into distribution up here and then a period of accumulation all throughout the summer in June and August, we actually had the SOPR flip negative into a period of accumulation. So I don't think that's what we're going to return to. I think it's much more likely of a scenario that we actually bounce from this one line because we are pretty overextended, to the downside already. Another thing that's interesting in terms of just looking at our most previous pullback and looking at the time that it took to bottom, if we go to the first day of capitulation there and then to the bottom in terms of time frame, it took us 2 weeks exactly, 14 days to bottom the last correction that we had down to about 40K or 42K. Then we consolidated for a couple days, and then the trend resumed that bullish price action. The interesting thing to me is that today we are actually at that 14-day mark with our current pullback as we get kind of a bounce from the 55K support level here. So, in terms of a time analysis, I think that we are getting a little bit closer to a local bottom here, especially when you look at the miners and this realized losses by the shorter term holders as well. So interesting stuff with Bitcoin there. I also do want to move to a news piece around Bank of America and stablecoins specifically. They've said some very positive things about the stablecoin industry lately and how it may affect certain payment related stocks within the equity market. So what I thought was pretty interesting in this particular article with Bank of America was that institutions are waiting for rules to be defined before increasing exposure to digital assets. And, quote, a regulatory framework should incentivize payment companies to integrate blockchain technology and stablecoins into their platforms, the bank said. MasterCard, Signature, Visa, and Western Union, all of which are buy-rated stocks in Bank of America's research coverage, could see an increase in value from stablecoin regulation. So definitely going to add those to the watch list. If we do see any advancement in terms of the regulation regarding stablecoins, but I just thought it was very interesting that Bank of America came out and said that I think they are starting to realize that banking and international settlement, specifically with stablecoins, really is the future, because you don't have to wait 3 days or have to deal with that traditional Swift bank payment platform. So
yeah, that's interesting, CJ. And I want to toss a question to you, Doc, because you talk with a lot of people on the traditional equity side, and I think CJ and I spent so much time in the crypto half of things that we're kind of immune to the FUD that is typically associated with those things. Do you still hear a lot of like FUD around regulation from those people that are kind of from the traditional equity side looking to get into crypto but are waiting for regulational clarity?
I do still hear it, although it's less all the time. One of the, of course, a lot of folks in 2017 thought it called the top, and turned out to be coincidental perhaps, but when the Merc listed Bitcoin futures in 2017, and you could, basically within a 48-hour period, that was the top for more than a year from that point when it hit almost 20,000. And the reason I bring that one up, Monty, is because it plays right into what you're saying. The more big institutional adoption depends on places like the CME to approve something like a Bitcoin future. It gives legitimacy to it. And I think the same thing is, and you did see a lot of institutions since then starting to get involved, endowments and so forth getting involved. And then it wasn't just Pantera with hedge funds, it was a whole host of others. And it's been growing. So it has been a fits and starts, stops and starts, because obviously the CBOE sadly launched a Bitcoin options and then had to shelve it when the volume dried up in 2018, and they basically backed away from it. That would look like a pretty smart listing right now, I think. But nonetheless, a lot of places do depend on big institutional buy-in. And by institutional buy-in, I don't just mean the Harvard and Yale endowments. I mean the exchanges themselves, the SEC approving a Bitcoin futures ETF. That was the easiest one for them to approve for all the reasons the three of us have mentioned, because you already had the future trading at the CME. And even though I am not a fan of all the fees that you rack up rolling that future and the 0.9% fee just to go out and buy it, because the three of us could buy you guys all the Bitcoin you want for a lot less. But nonetheless, for people that are just getting into it, and for that institutional buy-in that you just spoke to, Monty, approval of products like that Bitcoin futures ETF or the listing of Bitcoin futures in 2017, those were all critical points, I think. If I could, I want to show you guys a couple things, just a couple quick visuals, if that's okay, since I've been
absolutely
part of the crypto byte so infrequently lately because of a lot of travel. Let me see, share screen. And let's see, let's grab, boom, boom, boom. Let's see, is that, I'm not positive if I've got it, but let's see here. Share. Okay. So this one, are you guys seeing then the Bitcoin Volatility Index?
Yes, sir.
Okay. So that one We bottomed just a couple days ago at like 2.7% volatility, which was the low for a long, long time, even as Bitcoin came off from the new highs, 68,000 and change, back down to break all the way. As it broke 60, as you can see, if you look at that chart, I'll maybe shorten it up just a little bit, but right there, Sunday the 14th, it was 276, and then it came back up as we traded down through 255 this week, and presently it just sits right at about 3%. Alternatively, you could look here at the fear and greed index, which yesterday was dead solid neutral, 50, right in the middle, and now today, and you're seeing that one too, right, guys?
Mm-hmm.
Okay, that one, the fear and greed index, has now gone to a 33 today in fear. And that's, I think, because of that test of 55, even though we bounced pretty good off that level. These levels on the fear side can be great times to be a buyer. And on the greed side, as you could see last week, we were at a 71. Anything towards 80 has generally been a pretty good time to either lighten up or to get out of a long position if you're a trader, not a hodler. And then when it spins the other way, like it just has, buying in. Lastly, I thought this one was interesting too, guys. I won't show you this one, I just tweeted it, but there's a trial going on in Miami. And a Miami federal court judge could order 1+ million Bitcoins to be split in half. And some of you might be saying, why would that happen? Well, because somebody's claiming to be a partner of Satoshi Nakamoto. And the Miami federal court judge, if he rules that this, let's see, if it doesn't say this gentleman's name, but if indeed this gentleman was to be determined, at least by this judge, to be Satoshi Nakamoto's partner, whether it's a real person or whether it's a group or whatever, he may basically lay claim to a bunch of Bitcoins. And Satoshi has never been out there in the market selling the Bitcoins that he or they accumulated. So this would be a big thing. If 1 million Bitcoins, I'm not saying they'd all hit the market for sale, but if 1 million Bitcoins, more or less, that have been in cold storage got on the chain, that would be something that would not be positive in general for the way most of us view, again, supply and demand. The greater the demand and the fixed supply means, prices go up. If all of a sudden some of that supply is shifted a little bit from cold storage, which some of us think might never come on the market if Satoshi Nakamoto is either gone or if they're not intending to sell, those coins never come on the market. So anyway, I just kind of throw out those three things. Fear and greed index, definitely showing signs that maybe we should be nibbling here, and the volatility's kind of implying the same.
Yeah, thanks for sharing that, Doc. Also I wanted to quickly mention one thing that kind of went along with that, and it was kind of an interesting headline because it hasn't been in the headlines in a long time. Mount Gox, CJ. The name is from Magic the Gathering, which shows how old it is, way back in the day. But yeah, actually, there was a lot of fear that hit the market because there's an announcement made that, following that, pull of liquidity from Mount Gox way back when, that 141,000 Bitcoin that were under custody since then were going to be redistributed back into the market to those who lost them, and essentially that would be translated into massive amounts of sell pressure, because they would be going to rehabilitation creditors who would likely just flip it into US dollars. So that did result in a lot of fear. But if you look at exactly how much Bitcoin it's not enough to really shake the market. So I think it is mostly just fear. But yeah, another interesting story to go along with that Miami court case. I don't think either of them will have too big of implications on the market. I think what's important is the supply and demand factors, the on-chain things that CJ and I talk about, but still worth noting for sure. So thanks for sharing that, Doc.
Cool.
But I think that's all we got for today. As always, thank you guys so much for watching. CJ and I will be doing our Doge of the Day right after this for our members only. We'll be going in depth in some of the assets. Also, I want to take a look at some on-chain things that we didn't have time to talk about here today. But if you'd like access to that, just head over to marketrebellion.com/try crypto, where you can try your first week for just $7. We have a pro charting service, a 24/7 chat with a community of traders from all around the world. We have an extensive education curriculum with over 18 hours of content. We publish news, trade insights, and a whole lot more. So head over there and check that out if you have not already. And also, thank you to Voyager for sponsoring this show. Head over to investvoyager.com if you'd like to start trading or holding digital assets. You can earn up to 12% on DOT, 9% on USDC. The Voyager token has been performing very well with that listing on Binance and Coinbase last week. So good stuff going on over there. And if you do, use code Rebel25 when you sign up. That's all I got. Any parting words for our audience today, gents?
Please like and subscribe if you did enjoy the content here today. That's all I have to say. John, any parting words, my friend?
Don't be too much of a pig. If you've got some mana or sand and some of these others that you've done really well on, unless you really are going to hodl them forever, it wouldn't be a bad idea to take a little off the table on such big moves.
Absolutely. Well said. And on that, we'll end it there. Thank you guys so much for watching. Have a great rest.